Welcome to The Explainer. Today, we're going to decode some of those hidden banking rules. You know, the ones that can turn a super simple transaction into a really confusing situation. We're going to look at the why behind how banks handle checks and big cash deposits.
Okay, let's dive right in. We're going to start with two scenarios that are totally real world. I mean, this stuff could happen to you at any bank branch. They seem simple on the surface, but trust me, there's a lot more going on than meets the eye.
So, first up, meet Mr. Raju. He's got a check in his hand for 50,000 rupees. Not a small amount of money. He walks into the bank expecting to walk out with cash. Easy enough, right?
But when Mr. Raju gets to the counter, the cashier gives him a polite, no cash for you. Mr. Raju is, understandably, pretty confused. And that's our first puzzle. Why on earth was he refused the payment?
Okay, next, let's look at Mr. Kaptawala. He's a business owner, a great customer for his bank. He's had a good sales run and comes in to deposit the day's earnings. A massive 20 lakhs, all in cash.
But instead of a quick, simple deposit, the teller hits the brakes. He says a special procedure is required. Now Mr. Kaptawala is getting really frustrated, thinking, I'm a great customer, why are they making this so hard? And there's our second puzzle. What's the big deal with a large cash deposit?
All right, let's tackle that first mystery with Mr. Raju and his check. The entire answer, believe it or not, is hiding in two tiny little lines that you could easily miss. See, the key here is something called crossing a check. If you look closely at Mr. Raju's check, you'd find two little parallel lines drawn in the top left corner. Now, that's not just a random doodle. It's a very specific, very important instruction for the bank.
It is just wild how much power those two little lines have. An open check, one without the lines, can be cashed by literally anyone who has it. That is super risky if it gets lost or stolen. But a cross check, that has to be paid into a bank account. It creates a trail, making it incredibly secure because you can always trace exactly who got the money.
So, here's the bottom line. That cashier wasn't being difficult at all. Far from it. They were actually following a crucial security rule. By refusing to hand over cash, the bank was making sure that 50,000 rupees went safely and directly into Mr. Raju's account, protecting him from fraud or theft.
Okay, puzzle one, solved. Now, let's crack the case of Mr. Kaptawala and his 20 lakh cash deposit. Why did what should have been a routine deposit suddenly hit a major roadblock?
The whole situation revolves around this one number, 10 lakh rupees. In the world of Indian banking, this figure is a huge deal. It's a critical threshold.
You say, according to the Reserve Bank of India, the RBI, any cash transaction, doesn't matter if it's a deposit or a withdrawal, of 10 lakhs or more in a single day gets a special label. It's called a large cash transaction, or an LCT. And these LCTs get special attention.
Mr. Kaptawala's deposit was 20 lakhs. That's double the LCT limit. So the second the teller punched that number into the system, bam, a mandatory compliance rule kicked in. This had nothing to do with the bank not trusting him. It was all about the bank following national regulations.
So if you're the banker in this spot, what do? You can't just say no, but you also can't just wave it through. Well, turns out there's a specific playbook you have to follow. When the customer himself is standing right there, the process is pretty straightforward. First, you get the manager involved. The manager has a quick chat, to understand the transaction. In this case, it's just daily sales. Then they ask for a simple written declaration explaining where the cash came from. Once that piece of paper is in, the transaction is good to go.
Now, what if the customer sends an employee or someone? The process is a little different, but it's all about direct verification. The manager has to pick up the phone and call the account holder directly. They confirm the reason for the deposit, jot it down, and then, and only then, is the transaction allowed to proceed. It's all about that direct confirmation.
And it doesn't even stop there. The bank is also supposed to be doing what's called due diligence all the time. They're looking at the customer's whole profile, what they do for a living, their normal transaction patterns, even their lifestyle to make sure a big transaction like this actually makes sense for them. It's about making sure the whole financial picture adds up.
So we've gone through the what and the how, but that brings us to the most important question of all, the why. Why do these rules even exist? And what do they really mean for the bank and for you?
It really boils down to two big ideas. Check crossing is all about security. It's there to protect your individual money from getting into the wrong hands. The LCT declaration, though, that's about compliance. That's about protecting the entire financial system by helping to prevent things like money laundering. So, two different rules, but both are incredibly important.
But following the rules shouldn't mean you get bad service. And for customers like Mr. Kaptiwala, who are making these large deposits all the time, there's a really smart solution. The bank can offer a one-time declaration that's good for the whole financial year. That way, the customer follows the rules, and the bank provides amazing service without a hassle every single time. It's a win-win.
So let's just quickly circle back and put a bow on our two puzzles. Mr. Raju couldn't get his cash because the cross-check was a safety feature, not a roadblock. And Mr. Kaptiwala's deposit got paused for a mandatory compliance check, a small speed bump that can be smoothed out with that proactive, one-time declaration.
And that leaves us with one final big question to think about. These rules aren't just red tape. They're tools for building a safer, more transparent financial world. The real art of banking, then, is figuring out how to use these tools to find that perfect sweet spot between rock-solid security and 5-star customer service.